Hi, this is Lara at Elliott Wave Gold with your daily analysis for Thursday the 18th of June. I'm recording the video 10 minutes to 5 p.m. Eastern Standard Time. Upwards movement was not what the bear wave count expected. It was expected for the bull wave count, and the target there was met. At this stage, both bull and bear wave counts now expect quite a lot of downward movement. The bull wave count now sees a leading expanding diagonal in a first wave position complete, and second wave corrections following first wave leading diagonals are usually very deep indeed. So the bull wave count expects downward movement most likely to below 1180. Its invalidation point is at 1162.80. The bear wave count now expects the middle of a third wave down to begin. The bear wave count now requires confirmation with a new low below 1162.80, which should happen in the next few days if the bear wave count is correct. But the Elliott wave picture today now strongly diverges from the regular technical analysis picture, and so members must exercise their own judgment and approach this market with caution. We are still range bound. There's no breakout. Volume still indicates it's more likely to be down than up, but price has not told us yet what direction the breakout will be in. The bull wave count expects that gold is in a cycle degree B wave trending up, that cycle A ended off to the left of the chart at 1131 as a 5-wave impulse, and the first wave up within cycle B, that of primary A, is incomplete. A waves can subdivide as one of several structural possibilities. They can be either 3s or 5s. We can eliminate all but 2 for this one though, because the first wave up here is a 5-wave structure. It was an expanding diagonal. So primary A can only be a zigzag or an impulse. So we were expecting an impulse up at intermediate degree for a C or third wave. So far we have 1, 2, and the bull wave count now expects a third wave has begun. Its target is 1288, where it will reach 1.618, the length of the first wave. But we need a new high above 1232.49 before we can have confidence in the bull wave count and confidence in these targets. For now, within minor 3, I see minute wave 1 complete here and minute wave 2 to begin downward. It should find support at this lower edge of the base channel drawn around minor waves 1 and 2. It can't move beyond the start of 1 below 1162.80 to the downside. This is the price point which for the next few days will strongly differentiate bull and bear wave counts. Let's look at this at the hourly chart level where minor 2 ends down here. Minute wave 1, the first wave up within the impulse of minor 3, may very well have subdivided as a leading expanding diagonal, but there are a couple of problems within this wave count. Within a leading diagonal, the first, third and fifth waves are most commonly zigzags, the second and fourth waves must be zigzags, and the fourth wave must overlap first wave price territory. Leading contracting diagonals are somewhat common, but leading expanding diagonals really aren't very common. The rarity of this structure must reduce the probability of this wave count a little. The other problem is in this piece of movement here. I think there's actually an expanding triangle in here, but for this idea it just doesn't work. For this idea, we have to see subminuet B as a double zigzag, but it has a sideways move. It looks like a combination, not a double zigzag, but it won't subdivide for this piece of movement here as either an expanding triangle or a double combination, so it just doesn't have the right look. That's quite a problem for the bull wave count. If we have had a leading expanding diagonal complete here for a first wave, then we'd be expecting a very deep second wave correction, probably deeper than the 0.618 Fibonacci ratio, which is at 1179. So this wave count now expects a few days of choppy, overlapping downward movement. It can't move beyond the start of 1 below 1162.80. From this low to this high, I've checked the subdivisions here really carefully on a 5-minute chart, and I can see the C wave is a complete 5-wave impulse, so it's very likely for both wave counts that this 5-wave structure up is now complete, and we're going to see at least some downward movement from here. How deep it goes is going to tell us which wave count is correct, bull or bear. At the daily chart level, this is the bear count. It sees cycle A and primary 5 within it incomplete. Primary 5 extending at 957, it would reach equality in length with primary 1. In duration, it would be much longer indeed. The bear wave count requires a new low below 1131.09 before I can have full and final confidence in this very low target. At this stage, a new low below this point, 1162.8, would provide quite a lot of confidence in the bear wave count. If that happens in the next few days, then I would expect we are seeing a downward breakout. To the upside, it looks like we have a complete three-wave structure. That's what this looks like. It looks like a zigzag. It doesn't look like a leading diagonal, which is what the bull wave count has to see it as. The structure at the daily chart level has the clearest look. It looks like a zigzag for a second wave correction, which can't move beyond the start of the first wave above 1232.49. If it does continue any higher, I'd look for it to find resistance at this blue trend line, so I'm copying this over today to the hourly chart. Let's look at that. At the hourly chart level, where minute wave 1 is a 5-wave impulse, is this point down here. At the daily chart level, this structure has a clearer look. It looks like a 5-3-5 zigzag, and this sideways chop in here most certainly looks like a typical complicated B wave. But at the hourly chart level, when we look at the subdivisions, there are a few problems today with this bear count. First, I have to abandon the idea that this upward movement ended here as a triple zigzag. Minute wave 2 just is not unfolding as a flat correction. The B wave within it never did manage to reach 90% the length of the A wave. You cannot, absolutely cannot, see a 5-wave structure from this low to this high. This would be the third wave, and it would be the shortest by quite a reasonable margin, violating one of the biggest, strongest core rules for Elliott waves. So that is not a viable idea. So if minute wave 2 is a zigzag, and that's what it looks like now at the daily chart level, then minuet A within it must be a 5, and it must have ended down here. It won't work if you try and see it over here, but it will work if you see it over here as a leading contracting diagonal. But the problem here is the fifth wave overshoot is a lot bigger than they normally are for contracting diagonals. Contracting diagonals do normally end with a fifth wave overshoot, but not this big. This one looks wrong. There are two other problems for this wave count, or at least one other problem here. If minuet B is seen as a sideways movement complete here, the subdivisions fit absolutely perfectly, but there are two rare structures here. I'm not really concerned about this expanding triangle because the subdivisions are such a perfect fit, and it's supported strongly by MACD hovering about 0 while it unfolded. I do think that this is what happened here. This was an expanding triangle. I am a little bit concerned here about the running flat for subminuet wave W. The C wave has failed ever so slightly to move beyond the end of the A wave. But again, the subdivisions are absolutely perfect, and I've checked this all on a 5-minute chart. A subdivides perfectly as a zigzag, B is an expanded flat subdividing perfectly, and C will fit perfectly as a 5. So we could have had a running flat in here. The truncation is very small. I do think we have an expanding triangle here for an X wave, and here we have a zigzag, the second structure in the double combination. And at the daily chart level, that's what it looks like. It looks like B ended here. C is now 1.618 the length of A, so there's a nice ratio there, and 2 has corrected extremely close to the 0.618 Fibonacci ratio of 1 at 1205. If it continues any higher, it should find resistance at this blue trend line. But again, I've checked this carefully on the 5-minute chart. The subdivisions of this impulse are absolutely perfect. It most certainly could be over here. And because it's at the 0.618 ratio, it looks like a complete 3 at the daily chart level, and there's a nice ratio between minuet waves A and C within the zigzag. It is very likely to be over here. At 1093, minute wave 3 would reach 1.618 the length of minute wave 1. The regular technical analysis picture still at the weekly chart level is somewhat bearish. Volume is telling us that it's more likely eventually when price breaks out of this range that it will break out downward. We have this long held trend line from on balance volume strongly breached. We have a throwback up to that trend line and more downward movement from that trend line from on balance volume. That's bearish. We have this low here moved price higher, so price is trending upward, but on balance volume is trending downward. There's some negative divergence there. And within the sideways range, it's still this downward week, which has strongest volume. This doesn't always work. It's another piece of information to take into account, but overall, on balance, volume is telling us we're more likely to get a downward breakout. It's downward days, this 1, 2, 3, 4, 5. These 5 days have the strongest volume within all of this sideways movement, with 5 of the strongest volume days all being down days. Again, that's a little bit more information that eventually when we break out, it may be more likely that we break out downward than upward. But ADX tells us that there is still no clear trend, and so we should expect swings from resistance to support, from stochastics to go from overbought to oversold, and at this stage would be expecting an upward swing until price reaches this horizontal trend line or this one, and again stochastics is overbought. Only then would we expect the end of this upward swing. So this regular technical analysis approach would expect upward movement to continue from here, and that strongly diverges with both Elliott wave counts. We have a stronger volume day for this up day, but it's still not stronger than these 5 days back in here, which was strongest. It is stronger than this day though, so that's a slight cause for concern. And again, looking at volume within a sideways range, often the strongest day tells us what direction the breakout will be, but not always. It's a piece of information to take into account. It's not absolutely definitive. I really would like to see an up day with stronger volume than at least this day, if not this day, in order for that picture to be less clear, in order for it to not be telling us price is more likely to break out down than up. So I leave it up to members' own judgment to determine what direction they expect gold to move in next, with that regular technical analysis picture diverging so strongly from both Elliott wave counts. The situation is unclear, but both Elliott wave counts expect downward movement from here. That's all for me today with your gold analysis. I hope that all of our members are having a fabulous day.